Welcome to USA Alert Zone. What if I told you the IRS is letting you legally avoid taxes on nearly $46,700 of income every single year, just because of your age? It sounds impossible, but in 2025, it's very real. There's a new tax rule in effect that could save retirees tens of thousands of dollars, but only for a limited time. Let's break it all down. The tax break that could change your retirement. Congress quietly passed a law in early 2025 that reshaped retirement tax planning. As of July 7, 2025, we're already 6 months into a 4-year window where Americans age 65 and older can shelter a massive chunk of their income from federal taxes. This is more than just a tax cut. It's a retirement opportunity of a generation. What was supposed to happen in 2026? Before this law, the 2017 Trump tax cuts were set to expire in 2026, and taxes would have increased for most Americans. The 12%, 22%, and 24% brackets were all scheduled to rise, standard deductions would shrink, and over 60% of households were expected to face higher taxes. What changed in 2025? But that changed with this new legislation. Here's what's now locked in. Lower tax brackets remain in place. Standard deduction increased. New senior deduction adds thousands in additional tax-free income. If you're 65 or older, you can now earn up to $46,700 per year tax-free, starting in 2025 and lasting through 2028. The $46,700 tax-free breakdown. Let's look at the math for a married couple over 65. Standard deduction, $31,500. Senior bonus, age 65 plus, $3,200. New 2025 senior deduction, $12,000. Total tax-free income, $46,700 per year. Multiplied by 4 years equals $186,800 tax-free income. If you're single and 65 plus, you can still earn up to $23,750 tax-free each year. But there's a catch. This deduction phases out for higher earners. Phase-out begins at $75,000 for single filers, $150,000 for married couples. So if your adjusted gross income, AGI, exceeds these amounts, your deduction will be reduced. Example, married couple age 66. You and your spouse earn $100,000 in retirement income. Here's how your taxes look. Subtract $31,500 standard deduction. Subtract $3,200 senior age bonus. Subtract $12,000 senior deduction. You're left with just $53,300 in taxable income. That means $46,700 is fully protected from tax. Why this 4-year window matters? This isn't permanent. The new deduction ends after 2028, and future tax hikes are already being discussed. Right now, retirees have an unmatched opportunity to optimize retirement withdrawals, perform Roth IRA conversions, harvest capital gains, reduce future Medicare surcharges. After 2028, RMDs, required minimum distributions, kick in, tax brackets could rise, and this generous deduction disappears. Smart moves before 2029. 1. Roth conversions. Convert traditional IRA funds now while rates are low. Stay under the income limit to benefit from the deduction. 2. Capital gains harvesting. Sell appreciated stocks while your bracket is low. You might owe 0% in capital gains tax. 3. Strategic IRA withdrawals. Start drawing from IRAs in small amounts to avoid future tax spikes and Medicare penalties. 4. Watch your AGI. Make sure your income stays under the phase-out thresholds so you don't lose the bonus deduction. What if you're not 65 yet? If you're in your early 60s, you should still pay attention. This is the perfect time to begin gradual Roth conversions. Lower your future RMD burden. Manage your future Medicare premiums. Harvest gains before retirement. Plan now so you're ready to maximize the tax break once you turn 65. Quick recap. Seniors 65 plus can now earn up to $46,700 per year tax-free. Law applies from 2025 to 2028 only. Bonus deduction of $6,000 per person. Watch income thresholds to avoid phase-outs. Use this time for Roth conversions, harvesting, and tax planning. Final thoughts. This is one of the most powerful tax opportunities retirees have ever had, but most people don't even know it exists. If used wisely, this rule could protect nearly $186,800 in retirement income from the IRS. But you only benefit if you act now. Waiting until 2029 is too late. If this video helped you, don't forget to like, subscribe, and turn on notifications for more updates like this. This is USA Alert Zone, keeping you ahead of the curve. See you in the next video.